Okay, so thank you everyone for joining today. For those that haven't met, that I haven't personally met yet, my name is Morgan Mudge. I'm a vice president here and the general manager of TouchPoint Giving. Kind of looking forward to this webinar today. Should be pretty insightful and probably quite a bit different than any webinars we've done before. So for those that are not aware, TouchPoint's parent company now, Cass Information System, also owns a bank, Cass Commercial Bank. And Cass Bank specializes in church lending. So we thought we'd take this unique opportunity to hopefully answer some of your questions regarding the Silicon Valley Bank situation, and also probably just kind of banking industry as a whole, what's going on right now. You know, we're all called to be good stewards. So hopefully today, our time today can help us do that a little bit better. So I'd like to introduce two special guests here with us today. The first is Dwight Erdberger, who is the president of Cass Commercial Bank, and then also Chris Diamond, who, Chris, hopefully I get this all right, is the executive vice president and director of Faith and Ministry Financial Services. So that's a
shortest title on the history.
Yes. And I could say I've had the absolute pleasure of working with these two gentlemen and getting to know them quite well over the last 3.5 years. And you guys will all hopefully really enjoy our time here together. So with that, Dwight, if I could turn it over to you, sir.
All right, thank you, Morgan, and good afternoon, everyone. Wish we were meeting under a little better circumstances, but I think we can answer quite a few questions and allay quite a few fears as to what is happening in the financial markets right now. As most of you probably already have heard, Silicon Valley Bank failed last Friday and was taken over by the FDIC. And, you know, like most banks in the United States, Silicon Valley Bank had benefited quite a bit from the government programs that were put in place during the pandemic, meaning that quite a few deposits had flown into that bank. And they made some decisions to invest those funds in a way that was probably not prudent. They didn't actually lend the money. They bought government securities and agencies, but with long duration in order to get a better yield on their portfolio. Not a wise move, given that a lot of their depositors were startup companies in the tech space. And those of you who are familiar with what happens in the tech space is the typical company burns through a lot of cash early in their development. So when a tech company gets funded, it puts its funds into a bank account and then burns it down until it needs to be funded again. And a private equity or a venture capitalist will fund a second round. Again, money goes into the bank account, stays in the bank account until it burns down. Well, during the pandemic, with so much cash available, there were quite a few new tech startups. And those startups burned through cash very quickly. Up until the beginning of 2022, there was plenty of cash available to fund these startups. But as interest rates started to rise, concerns started to increase about the economy, the venture capital firms and the private equity firms started to pull back on their funding. That forced a lot of these startup firms to have to burn down their cash without replenishment. So the demands on deposits being withdrawn from Silicon Valley Bank really began to eat into the investment portfolio that Silicon Valley had purchased with those deposits. Those investments were worth less today than they were when they were purchased because they're interest rate sensitive and they were long duration. And so Silicon Valley had to make a decision to sell those bonds at a loss. And they did so in such a dramatic fashion. They announced last week a $1.8 billion loss on the sale of those bonds, and the need to raise capital to replace what they had lost in their capital account. And unfortunately, investors very quickly ran for the sidelines when Silicon Valley went out to try to raise that extra capital, and they were unable to. And so on Friday, the FDIC had to step in and close the bank. Good news is that over the weekend, the FDIC and the federal government struck a deal to protect all the depositors, not just the 250,000 that is insured by the FDIC, principally because the issues here were not bad loans. It was the inability to liquidate the bond portfolio without significant losses. So the government stepped in, agreed to support the bank and all of the depositors. And in addition to that, on Sunday night, announced a national program for all banks to be able to borrow at par value against their securities portfolio. You know, virtually every bank in the country has a securities portfolio. It's how banks typically invest the funds that they can't lend, don't have loan demand for. And it's typical that those are, you know, US government securities of modest duration, 2 years, maybe 5 years at the outset. Unfortunately, Silicon Valley Bank had been buying 10+ year bonds, and those are very sensitive to interest rates. So as interest rates rose, the value of those bonds just plummeted. But the program that the government has instituted does in fact protect all depositors across the US that have deposits at banks that are just having a difficult time with liquidity because of the bond portfolio not being liquid like it usually would be. And that should create an environment that settles down the turmoil that existed over the weekend and on Monday. Although today we're seeing some of this contagion spread to Europe, with some of the European banks finding themselves in the same situation that Silicon Valley Bank was in. So I don't think this is a widespread and systemic type of issue. I do think that you do need to be thoughtful about where your deposits are. But I do believe that for the most part, deposits are going to be honored, provided the bank's issue is only with liquidity as a result of an investment portfolio that they can't liquidate. So let's talk a little bit, though, about CAS, CAS Information Systems, and CAS Commercial Bank. CAS Information Systems is a firm that has been in the payments the payments business for quite some time. We pay the bills of Fortune 1000 companies on their behalf because we're very efficient at making those payments happen. And they fund us in advance of us needing to pay a bill by up to a week. So we are very liquid and have resources available to us to pay our bills as we need to. And the bank serves as the primary vehicle through which those bills get paid. In last year, about 100 billion of payments flowed through the bank, 100 billion in and 100 billion out. So we're quite a significant organization when it comes to the importance of CAS Information Systems and the overall payments flows in the United States. The bank has been very conservatively run because obviously with millions of dollars on deposit from very large corporations, we needed to be very careful about how our overall portfolio performs. We're also much more conservative with our investment portfolio. So we are very different than Silicon Valley Bank in that perspective. At the time Silicon Valley was closed, 60% of its assets were in the bond portfolio, fixed rate investments with mostly very long duration, 10 years and more. Our investment portfolio was a modest 29% of our overall assets, and in much shorter duration. Matter of fact, a big portion of the bank's investment portfolio mature in the next 16 months, less than 2 years. So we're in a different situation than Silicon Valley Bank. We don't do startups. We're not a firm that's involved in the tech industry. We have no borrowings today. We, in fact, have over 430 million of untapped lines of credit that are available to us should we need liquidity. And in addition to that, we maintain a large amount of cash, over $100 million on average, to pay the bills of our commercial clients as they come due. So we are very liquid and have huge amount of resources to create more liquidity should we need it. I'll also add that CAS is a 116-year-old company. We've been through lots of very difficult times and thrived through them, including the Great Depression in the 20s and 30s, the dot-com bust of 2000, and the Great Recession that occurred not too long ago in 2007, 2008 timeframe. So the organization is a very strong and stable one that will be here well after this crisis passes. Very experienced management team running the organization, which should make you feel very good about the stability now of TouchPoint as part of our organization and its ability to continue to serve your needs on the software side of what you need. Our assets are of very high quality and, as I said before, are very liquid, and we have more than adequate liquidity in reserve should we need it. It's interesting, CAS Bank, having been around for 116 years, many of our clients have been with us for decades. As a matter of fact, we have one client that's been with us for over 100 years. But the vast majority of our clients have been with us for at least 40 years, if not longer. And we've built long-standing, stable relationships with those clients, which leads to very stable deposits and relationships that keep the bank well funded. But also, one last point here before we open it up for questions is that the bank is very well capitalized. In a lot of ways, it's overcapitalized. Our Tier 1 capital ratio, which is the primary measure that regulators use to determine who is well capitalized and who is not, is almost 15%. A well capitalized bank would be north of 6%. So we've got more than double the capital that would be considered a well-capitalized bank. We are very conservatively run. We've not had a credit loss in over 9 years. We don't have any loans that are 30 days past due or more, and no non-accrual loans. And we have a very significant reserve, despite the fact we have no credit losses for 9 years. We have over $13 million set aside should there be any need to fund a credit loss. The bank is completely self-funded with a deposit base of about $1.2 billion, a loan portfolio of about $1 billion, and very, very capable of providing the kinds of services that our clients like you need. And I'll mention one other thing here, and I'm sure Chris will want to talk more about this, but we do offer two different types of products that can generate for depositors that can cover a substantial proportion, if not all, of the deposit with FDIC insurance. We have a program called the ICS program for money market accounts that will provide insurance up to $100 million, fully insured, and a program called CEDARS, which will insure certificates of deposit up to $50 million. So if you're all concerned about your deposits in the bank that you're working with, we are certainly here to talk to you about what we can do to help you and also get full insurance on your deposits. So let's kind of open it up. If there are any questions about what happened, what's going on today, and any questions about CAS, I'd be happy to answer them.
Yeah, so if anybody has any questions, feel free to just type them in that Q&A section at the bottom.
While you're typing, I might just throw in this. Dwight mentioned it. We have no exposure at the bank to tech or crypto or any of these riskier assets that are out there. But we do have a lot of exposure to the church, which is what we love. You should know that 40% of our loan assets at the bank are invested in churches and ministries. Again, to reiterate what Dwight said, we have no church, no loan that's 30 days past due. We don't own any real estate that's ever been foreclosed on. We just have an approach to underwriting that really seeks to protect churches and pastors. That's our heart, is to protect pastors. As you may or may not know, more pastors leave after a capital project than in any other time during their ministries. So, what we want to do is make that a very safe process, a very successful process. So we come alongside for counsel, because our first call as a bank, as the church and ministry division of CAS, is counsel. God probably isn't going to ask us a lot about our loan portfolio, but he just might ask us, how did you treat my people? So that's what we think we're accountable for in this process, and that leads to safety and soundness. We want Christ to be lifted up in the church, and if you have to talk about money all the time to help make mortgage payments, well, that takes away from the gospel. So we want the gospel to be preached. We want to come alongside you and provide good, godly counsel for your projects and in your ministry for running finances. So happy to answer any questions you might have. One other point I might make is Dwight also referred to again, the safety and soundness question. There is a rating agency out there called Bauer Financial, who evaluates banks and savings and loans across the country. And we are consistently a 5-star rated bank in their matrix. And so that information can be had by simply looking up Bauer Financial. We can send you the report as of 12/31/22 if anybody's interested in that. Happy to do that. So again, open to questions. I don't see anything that's popped up.
I have one here, Chris.
That one?
Okay. Do you have this is for you or Dwight? Would you have any recommendations to anybody that does have funds, might have an account with a bank like Silicon Valley Bank, as far as that's been taken over? What are the steps there? I know we do have a couple of church partners in that situation.
Well, the FDIC has guaranteed all depositors at Silicon Valley Bank. I don't know the particulars between the timing of when those funds will be available. I suspect that they're probably available now.
Yeah, but if I could step in there, they have made a statement that they have put the assets in the bridge bank that they created, and it's business as usual was the announcement that was made. Now, how that looks on a practical basis, I don't know, because I am aware of one person that was trying to wire significant funds out of Silicon Valley, and that wire was held up. So, there can be a bit of a delay as the FDIC takes over here. So,
Okay.
I will also mention that there are opportunities to invest funds in brokerage firms that offer money market accounts at pretty significant returns. And I just urge caution there, because those returns are being generated by assets that are usually have some duration risk associated with them. And with the current disruptions in the bond markets, it may not be possible to convert the back to cash as quickly as typically advertised. I don't have any particular knowledge or concerns of any losses that might someone would incur in those funds, but just note that that's a whole different organization and a whole different set of insurance rules and liquidation rules than the banking system. So be somewhat cautious if you do decide to move funds into a brokerage account, money market type account. Take a look at the prospectus and understand exactly what it is they're buying to generate that return. Any other questions? Any other thoughts? I will tell you that CAS has been involved in the faith-based world now for 26 years. We're a very good lender in this space, and have, as Chris said, provided a lot of good advice to our clients over those years. The only way that we can continue to offer the lending that we do in the faith-based world is to have funding from the faith-based world as well. So it's important that we generate deposits, and we do think of it in a very unique way. And I just wanted to pass this along to you. So, churches that we have lent to in the past and have fully repaid the debt have left their deposits with us. And that gives us the ability then to turn around and lend to another church for their purposes. And as they repay, they leave their deposits with us. And we call this the kingdom flow of funds. What churches have left with us in terms of deposits, we turn around and reinvest in the kingdom in order to generate new opportunities for churches to reach their communities. And we certainly would appreciate any opportunity to talk to you about your deposits and how they might help us continue our mission of lending to churches to expand the kingdom. So Chris, I don't know if there's anything else you want to add to that, but
I'll add something, or maybe for some clarification, if somebody was interested, Dwight, they can, of course, reach out to me and I could forward it on, but is there another way that somebody should reach out to the bank if they have any questions?
You can contact me directly. That would be great. I'll two methods to do that simply is my email address, which is chrisdiamond@casbank.com, and that's CHRISDIMOND. There's no A in diamond, the cubic zirconium of the diamond world. No A in diamond there. chrisdiamond@casbank.com, CASSBANK.com. My personal cell is 949-202-6359. Again, 949-202-6359. So Yeah, I just add that, that investing that we do in the kingdom provides what we call a kingdom rate of return. It's investing in people, seeing souls won for Christ, and that is immeasurable. It's beyond anything that we can talk about here in terms of returns. It is a kingdom rate of return, and that's what we love to talk about, and that's what we love to be involved with. So, yeah, just that's who we are.
And I'll leave you with one last thought. The executive team at CAS is having daily meetings to discuss kind of what is going on in the banking industry and in the financial markets. And we will stay on top of anything else that might occur over the next several days and weeks. And certainly be able to share with you if there are other concerns or issues that arise, our thoughts and our prayers on how to approach this as we move forward. So stay tuned, stay in touch with your TouchPoint representative, and we will ultimately find our way forward together. So thank you for your time. Appreciate you listening in today.
Perfect. Dwight, Chris, thank you for jumping on and doing this with us. And thank you everybody who joined, and have a blessed day.
Amen.
Thank you.
Yep. Take care.
Thanks all.
Bye-bye.
Bye.